Welcome back to the channel. Today we're going to do a breakdown of the last week in March, which was my 77th week of trading my strategy. If you're new to the channel, this channel is where I go over my trades for the week and what I'm looking at in the market. My trading style is credit and debit spreads, which I found to be pretty easy to learn, and it gives yourself some leeway in the market, right? So in this channel, I usually just break down my trades, how I did for the week. I haven't posted videos in the recent times, mainly because of the market volatility, and it was more so me, getting my feet, getting my feet straight in the market. However, now that I'm a little bit more comfortable, I'm definitely going to start doing these weekly videos. Quick disclaimer, this video is for educational and information purposes only. Don't take it as financial advice. So in this video, we'll go over my P&L for the week, trade metrics that I look at, sort of give a market overview of what I'm seeing, volume, the technical analysis, the price action as well. We'll go over 3 trades that I took this week that led to my P&L, 2 wins, 1 loss. Next, we'll go over some of the lessons that I learned from these trades and just throughout the week, things, conclusions that I took away. Lastly, I'll give some market insight into what I'm hoping this week, as the first week of April is going to be a very volatile week. And then lastly, we'll just conclude the video with any questions and any more details that I may get into. So going to the week's performance, we made around $2,700 with an average trade of $169 while taking 16 trades. The risk was high, but I was managing my stops pretty well, so I'm very comfortable with that 5% risk per trade. The average day to expiration for each trade was around 2.6 days, while the trade length was around 1.9 days, almost 2 days. This week I had 11 wins out of my 16 trades, which leaves me at around a 69% win ratio, while I had 8 day trades. If we take a look closer into the stats for this week, you can see I took, on this pivot table, between the 16 trades, 13 of them were credit spreads, 3 of them were debit spreads. I've been really liking how I've been trading the credit spreads, and as well as the market volatility. Credit spreads have been a pretty good strategy here. If we look at all the symbols that I traded for this week, 9 trades were on NDX, which is QQQ. 4 trades were on RUT, which is IWM, and 3 trades were on SPY or SPX. However, from these stats, you can see the big outlier here is NDX. I traded NDX really well with a 78% win percentage and an average trade of $309. So that might be something that I look into going forward in the next week, continuing to trade NDX. So those are some of the stats that I looked at in terms of how I'm doing in whatever the type of trade I'm doing or the symbol that I'm trading. Next, let's take a look at some of those trades, right? So these numbers are actually the trade number. So the first trade we'll look at was 2 trades, trade 658 and 660 on NDX, $750 win. Next trade we'll look at is RUT, which was a $900 loss, and a crazy number, 666, but we'll go over this $320 win as well. So let's go to trade 658 and 660. So the first trade we're looking at is on NDX. This PowerPoint is where I do my trade review, but we'll take a look at the charts and what I was seeing. If we do a 1-hour chart, the blue arrows is where I entered these credit spreads. And essentially, if you take a look at the price action, we just made a new leg down and this double bottom here. So this double bottom on Wednesday and Monday, indicated by these This double bottom acted as support, and we knew that there was a new trend in place. So essentially, you one had a trend line break, and then two, you had a double bottom. So my bias is already thinking reversal. My bias is already thinking, let me go long with credit spreads. Right. So if we take a look at the 5 minute chart where I actually entered the trades, I entered the first trade at around 10 o'clock with a break even of 20,146. We can indicate that like here. So essentially, with a credit spread, I will end up collecting the full credit if price is above this level, right? So if I entered right here, I put my break even to right below the low of the day. So essentially, all I need to do is have price stay above the break even. So I entered the first trade here at around 20,200, and you could see price is already going higher, so I'm able to collect the full credit. And then lastly, I call this the double dipper because you first get that uptrend higher, and then we know that the market will eventually pull back. However, the overall trend for the day is still long, right? Low of the day, high of the day, right? Price is still going higher, but price never goes in a straight line. We know that there was going to be a retracement, so I knew that I can probably come back in this trade later on in the day, which is what I did later on in the day at around 1:40 p.m. I took my next trade, entering at around 2,220. However, my break even was below this low, 2,190. So all I needed was price to stay above that break even, and I'll collect the full premium. And for this trade, for NDX on this day, it was a 0 day to expiration option, so I was able to collect the full premium. This is sort of the beauty of credit spreads because, one, if you're trading it on a trending day, price never really comes back to your break even. And I could have maxed out, bought a lot of contracts on this first entry, and then been safe for the whole day. However, I wanted to come back in the day and sort of continue to ride that uptrend, as I knew that we had reversed on the longer term trend. So the two charts that I'm looking at here is the chart on the left is a hourly chart, and then the chart on the right is a 5 minute chart. I'll use the hourly chart to sort of get the trend, assess what the market is doing, and then lastly, to enter my 0 days to expiration trades, I'll enter on the 5 minute chart. So that was the trade on NDX, where one of the best trades of the week, where I collected around $700, $750 on the day. The next trade we'll go over is a loss on the week, and a big loss where I learned a lot from this trade. Essentially, I took the same approach, a credit spread. However, as opposed to doing the 0 days to expiration, I took a 5 days to expiration. So let's take a look at the metrics and the trade itself. So going to the hourly, again, I entered around this breakout, and then I put my break even at 280. The reason I took a big loss on this trade is because after price had come down to my break even level, I continued to hold the trade when one of my rules is that once it crosses the lower mark of the spread, you just close the trade. I think there are a couple reasons why I held. For one, I saw this hammer candle on the 1 hour, and then the following candle, looking back at it, is a bearish candle. So that should have been my sell point. But that sort of gave me hope to stay in. And then I also had a couple more days for the trade to mature. When you take a look at the price action and you see how price sort of, where we're distributing and came all the way down to 2000 to 1980, made this almost the inverse head and shoulders and started to make higher highs and higher lows. So my thinking was that this trend will continue. So I entered a credit spread, which you're not going to win all your trades. So I wasn't mad that this trade didn't work out. The one thing that was frustrating was not closing the trade early. So I think this was just a lesson to continue to close trades and in a way, don't take a big loss. Just if price is already coming down and the spread isn't working, close the trade early. Especially with credit spreads where the amount of money you can make is limited to how much you can lose. Right. So if I take a look at the risk profile for, let's just get a 33, let's just get a 30 delta, which is what I usually. So, and let's say we analyze it. So let's say I want to sell this for $150. With the credit spread, let's say I sell one. So essentially, the most I can make is 150, but because it's a 5 wide spread and I paid $150 for it, the most I could lose is 350. So your max loss is a lot higher than your max gain. However, you have a lot of leeway room when you enter. So when I entered at this breakout at 2,106, my break even was at 2,800 or 2,070. In a way, just because you picked that delta doesn't mean you could be right. So this is one of the trades where I took the loss, and big learning lesson to just one, obey your strategy of, this trend clearly was broken. And lastly, just if it passes that break even, just take the loss. So definitely a learning lesson when it comes to this trade. And the last trade we'll go over is trade 666. When funny story, when I knew that we were coming to this trade, I just envisioned that it will be a loss just because of this number. But this was a pretty classic trade and a very simple trade. I took a call credit spread here. So essentially this is going short the market. And I'll tell you what I was looking at with this RUT trade and how I executed. So again, right, from the trade previously that we went over, and I saw that RUT couldn't, okay, the bears are dominating this market. So I just need a nice entry point to go in. And when I'm looking at entry points, I like to look at different trendline breaks or different patterns. Right now, this looked like a bear flag, right? So essentially, we had point A to B. This is the downtrend. And then we made this flag pattern of higher lows and higher highs. We can even make it with a channel. And essentially, once we crossed this level, this is when I knew, okay, we can go short the market. So the next day, if we take a look at the 5 minute, the next day, this was the Friday, March 28th, where we went down almost 2%. I think one thing I want to start doing on these days is making it a day of higher return, right? If I get this much volatility, I should be profiting more money. Or maybe that's just the greed in me and I should just take the wins while it's there, right? So let's take a look at this trade. If we take a look at where I entered on the 5 minute, we entered on that fourth candle down, which meant my break even was actually around the high of the day, around the open. So again, all I need is price to stay below this 2,600 level now because I'm going short the market. And if you just look at if you continue that day, you see exactly what happened. And this was a profitable trade that I sold in probably 30 minutes, right? Because we had this much volatility. But this trade all started with the higher time frame analysis, right? So let's clear this drawing set and let's take a look. We had this initial trend down, trend broke, and now we're making higher highs. Now we're making higher highs and higher lows. When we connect the lows and look at the channel, we see right here where I'm putting this bubble. This is where price broke this trend up, this retracement trend, and we made this bear flag. So I entered the next day right around here and just went short the market. So a lot of my strategy does deal with trends and trendline breaks, but it's using it with the way I use credit spreads is what makes it unique, I feel. Definitely ask questions if I feel like I'm mumbling or not making too much sense. I feel like, I know my strategy well, but if I want to teach it and if I want to master it, I should be able to word it better. So we'll see. So I think the lessons learned from this week is to, one, continue with the 5 Ps, which is the phase, the pattern, the price action, the position, and the patience. With phase, you want to look at if you're accumulating, if you're distributing, or if you're consolidating. So essentially, you're looking at the trend. The pattern is what makes you intrigued in the trade. If you see a channel, a bear flag, if you see a head and shoulders, you can identify. Lastly, you want to have the price action in your direction. You want to have the candlesticks in your direction. You want to have technical analysis flowing in your direction, either with some convergence or with divergence. Lastly, you want to get your position where you want to size up, if you want to size down, if there's too much volatility. Those are all things you need to take a look at. And then lastly, just patience, right? Patience in the market, patience with the setups. One thing about patience, one thing I started doing is waiting until 10 a.m. to place the first trade. And then last thing is just cutting the losses early. I think with that RUT loss, one thing I could have done with the market was just cut the trade early. And then not take a $900 loss, probably make it a $300, $500 loss. Lastly, we'll just take a look at what I'm looking at in the market, some insights that I'm looking at. With RUT, and we always start with a daily, even a weekly time frame. But with RUT, we just gapped down and made this double bottom again. This bottom is on a technical level. We are on support, on a higher time frame support. Right? So if you take a look at all these circles, we came to this level, bounced. Came to this level again, bounced. And now we're at this same level. So I am pretty bullish on the small caps, on RUT, IWM. I think, however, this week we just have a lot of news when it comes to inflation data, and then Trump is going with Liberation Day, is it? So we'll see how that goes, and I'll definitely be a market participant in that. When we take a look at SPY, sort of a similar pattern with this double bottom. Not as strong as a support level, but I do like the double bottom, right? And then one thing I like about this price action is this is a reversal pattern, right? This is a piercing candle. We didn't pierce too much into this candle, probably pierced around 50% into the previous day candle. However, this makes me bullish for a possible reversal. What I'll be looking for is a trend line break with these levels here. And then lastly, let's go to Qs. A little less optimistic here, right? Let's take a look at this piercing candle. Didn't pierce as much. We opened very low at 461 and we filled the gap well. However, we made a lower low and we completed this bear flag pattern. So I'm definitely wondering if we continue to go low or if we hold. I was gonna say I'm not a betting man because I'm definitely a betting man. I am a trader. My bias right now is that we go lower, but we'll definitely see. I do like that there was a lot of volume on this day, and it's almost like we flushed out the sellers, right? Sellers gonna continue to push this price down. So let's definitely see how the next couple days are gonna come with the market. Again, Trump is announcing the Liberation Day, a lot of inflation news, so we'll see. And then, yeah, I think I'm definitely gonna do more of these breakdowns. If not for you guys, definitely for me and my thinking when it comes to the markets. This isn't something that I'm taking lightly at all. It's something that I know I'm gonna be able to scale, right? Able to be collecting $10,000 per spread. If you have any questions, want me to break something down more or even more, or asking about a trade, how I trade, what credit spreads mean, what they're about, just leave a comment. And yeah, till next time, peace.